The Reserve Bank of India has released its annual report 2013-14, and one thing that emerges is that the central bank is now more upbeat on the growth prospects of the economy, though significant risks of inflation still persist in the economy. Let's go straight across to Anirudh Ghosh to understand what are the highlights of the report and what is the economic picture looking like for FY15. Anirudh, good to have you on the show. Now take us through all the highlights, and is RBI now looking more optimistic about India's growth?
Indeed, Nisha, a much more optimistic picture being painted by the RBI as far as this year's annual report is concerned. And also, of course, what they've done this time around is put in a different chapter as far as the prospects for the economy in 2015 is concerned. And of course, they've actually come out and said that there is a much better prospect as far as economic growth is concerned. Also, significantly, what they've done is they've removed a clause from their overall GDP growth projection. That was, of course, the clause on the downside risks to the GDP growth. So what they've said this time around is that there's a balanced risk as far as the GDP growth projection of 5.5% in the central estimate is concerned. So clearly, a lot of good things coming out from the report as far as, the fact that the RBI has taken note of a few green shoots in the economy, looking at the kind of IIP numbers that are evolving. They've also spoken about how, geopolitical pressures across the world seem to be working a little bit in favor of India's growth story at this point of time. But of course, they've sounded a note of caution in a very typical central bank style, talking about how inflation and a number of global pressures still remain. The fact remains that geopolitical tensions in the Middle East are a matter of concern. The fact also remains that inflation could be on the rise if the kind of monsoon that a lot of people have been predicting doesn't really materialize. One key thing, of course, here to keep in mind is that the RBI seems to believe that the overall negative impact of the deficient monsoon may not actually be as bad as a lot of people had expected. They actually seem to believe that the negative impact of monsoon on both growth as well as inflation will be quite, it'll be quite within the tolerable levels. So, of course, that's one key aspect coming in from there. The other aspect, of course, remains as far as the inflation situation is concerned. They've again reiterated the fact that they want to remain on the path of inflation management, that inflation management remains a key idea before they go ahead and see long-term growth coming in. So of course the 8% target for 2015 and the 6% target for 2016 are still very much on the cards as far as the RBI is concerned. So all in all, a number of key risks have been pointed out. Not too many new risks, but the new thing over here, of course, remains the fact that the RBI is sounding a lot more upbeat on growth. And going forward, if inflation does remain, as per these levels, one could expect that, interest rates also could possibly remain at these levels. But clearly, remember, a lot of people are expecting inflation to inch up as far as January 2015 is concerned. The real battle for the RBI, of course, is going to begin only after January 2015 when they embark on that mission to reach CPI inflation at about 6% by January 2016.